Welcome to Money and Metals. This is a special report examining undervalued small-cap companies with a potential for substantial shareholder appreciation. I am your host, Mark Weaver. You can find us on the web at moneyandmetals.com. Pele Mountain is an advanced stage exploration play near Elliot Lake, Northern Ontario, focused on rare earth elements and uranium exploration. It trades on the TSX Venture Exchange under the symbol GEM. When we started following this stock, it was at 17 cents. Today, its stock price is approximately 31 cents. Closing volume on Friday of this past week was 1.5 million shares traded, and Pele's market cap is approximately $31 million. With us today representing Pele Mountain Resources is its CEO, Mr. Alan Shefsky. Welcome to the show, Al.
Thanks, Mark. It's great to be here.
For our listening audience who have not heard of your company before, could you briefly describe the exploration successes you've had at your flagship project, Echo Ridge, near Elliot Lake, Northern Ontario?
Absolutely. Pele Mountain's exploration success has included our first big NI 43-101 resource estimate. That was in 2007, and it included 6.3 million pounds of indicated U3O8 and 36 million pounds of inferred U3O8 resources. Since then, we've completed an additional 130 drill holes, mostly infill drilling, and that was to create a detailed block model for mine design purposes. We've recently retained Scott Wilson, Roscoe Postel to actually do an updated resource estimate that will include not only U3O8, but will also include rare earth elements for the first time, and it's going to be ready by the end of this year. Pele Mountain's also made a lot of progress towards the development of Echo Ridge, including completing a positive scoping study in 2007 and subsequently compiling a project description that details our approach to sustainable development at Echo Ridge. And the project description has already been filed with the Canadian federal government's Major Projects Management Office and the Canadian Nuclear Safety Commission.
Could you briefly comment on the strategic value of uranium and the rare earths?
Uranium is used to fuel nuclear reactors to generate electricity. And there's currently about 440 reactors online around the world that are generating electricity. Because nuclear energy can produce a lot of electricity without creating greenhouse gases as byproducts, and because a lot of governments around the world are trying to reduce greenhouse gas emissions, nuclear energy is going to be an increasingly important source of electricity in the future. So there's now a nuclear renaissance underway. There's many, many new reactors that are under construction and even more that are planned. Growth looks like it'll be sustainable for a long time. So with the growing number of reactors, there's a new and growing global demand for uranium. The supply of uranium produced from all the mines operating around the world right now is much less than the uranium that's being consumed in the operating reactors. And the shortfall is being made up from above-ground uranium that was mined in the past. Now, the amount of this above-ground uranium, or the secondary supplies, is limited. And that's why we believe that the imbalance of reactor demand over mine supply is ultimately going to lead to significantly higher uranium prices. In the case of rare earth elements, the supply of these strategic metals is controlled by one country right now. That's China. China produces about 97% of worldwide supply of rare earth elements. And they have made a decision to reduce export quotas recently by about 70%, and that's restricting the available supply of rare earth elements for the rest of the world. The problem is that the demand for rare earth elements is growing very quickly because rare earths are essential components now in many high-tech, clean energy, and military applications. So as a result of the Chinese export restrictions, the price of rare earth elements have gone sharply higher. Until new sources of supply are available, this sharply increasing price trend is likely to continue.
I think you've even supplied Molycorp at one point.
Indeed. Molycorp got some of the concentrates from Denison back in the 1980s, and that was a source of the heavy rare earths for Molycorp.
In advance of our broadcast, we received a number of emails from potential investors who have noticed how much your share price has risen over the last week to 10 days. And they're asking, are you overbought or undervalued at this point? Have they missed the boat?
Well, it's a good question. Pele Mountain's Echo Ridge mine has a very large deposit of uranium and rare earth elements. And the deposit provides leverage to the prices of uranium and rare earth elements. The price of Pele Mountain shares in recent years has been relatively correlated to the uranium price cycle. So when the price of uranium moved up to over $100 in 2007, Pele shares went as high as $1.50. And when the price of uranium subsequently went down, Pele shares went down and traded as low as around 10 cents a share. So what we're seeing now is some strong increases in the price of uranium. Last week, uranium was up $4 a pound in the spot market. And the prices of rare earth elements are also really taking off and continuing to go up. So yes, our stock has been up a lot in the last week or 10 days. And what that shows is that our very large deposit of uranium and rare earth elements at Eagle Ridge indeed provides our shareholders with leverage to the prices of those underlying commodities. As far as whether we are overbought or undervalued, I think that depends on what direction the price of uranium and rare earth elements are going to go. My personal belief is that the price of uranium and the price of rare earth elements can go much higher.
Okay, that being the case then, your last news release, which announced that you projected up towards 218,000 kilograms of recoverable rare earth oxides annually, in addition to 826,000 pounds of uranium at Echo Ridge. What would that mean to an investor?
Those projections were based on production rates that were used in our scoping study, combined with assay results and recovery data from leach testing at SGS Lakefield. What an investor should take away from this information is that Eagle Ridge can provide a significant long-term supply of these strategic metals. On the rare earth elements data, it's important to note that 50% of the recoverable rare earth oxides will be heavy rare earth oxides plus yttrium. The heavy rare earths are rare, and they sell for very high prices. Elliot Lake is the only place in Canada that has ever successfully commercially produced rare earth oxides, and it was the most important source of heavy rare earth oxides in North America.
All right. What are the next steps needed then to advance Echo Ridge toward the point of production?
Well, since our scoping study was completed in 2007, we've been advancing detailed mining, processing, and waste management studies to optimize the operating and capital costs for the project. We're also strengthening our technical team in preparation for development at Echo Ridge. Our Vice President of Operations is Fergus Kerr, and he was the mine manager at the Denison mine, which was the largest former producer in Elliot Lake. We're also working together with SNC Lavalin, SRK Consulting, Scott Wilson, Roscoe Postel, Total Mine Development, Merarco, and a lot of others to help us in developing this project. And we're assembling the team right now that will have the skills required to move this project through the feasibility and permitting work, all of which will be needed to secure a license to construct the mine.
Well, I think in addition to Fergus Kerr, you have some other appointments that are worthy of note. Recently, Dr. William Bird and Dr. Anthony Mariano have also come onto your Rare Earth Advisory Board. These gentlemen have solid international reputations. What do they bring specifically to Pele? And at this point, how are they helping to advance your work at Echo Ridge?
I was delighted to welcome these gentlemen to our Rare Metals Advisory Board. They're among a very small and exclusive group of experts outside of China that actually have a solid working knowledge of the geology and mineralogy of rare earth elements. Their participation on our Rare Metals Advisory Board strengthens Pele Mountain's technical team, and it helps us to ensure that our team will have the full range of skills that are going to be required to move Eagle Ridge towards development and production.
I noticed you have no production revenue at this point, and one of the challenges that face junior companies with fantastic resources is just being able to manage the cash. What does your monthly burn rate look like, and will you be needing to go back to the equity market in 2011 to raise money?
Our burn rate is about $100,000 a month right now, plus the variable portion that's related to exploration and development work, and that is definitely ramping up. We haven't finalized our budget for 2011 yet, but with a focus on moving Eagle Ridge forward aggressively, it could require about $5 million next year. And we currently have about $3.5 million in the Treasury. There's lots of options and warrants that are in the money now, with the stock having moved up over the past week or 10 days. And the exercise of those warrants and options could very easily provide the balance of the required funding for next year.
Okay, with financial risk minimized, what additional risks do you see inherent in the project going forward?
I think one of the really big risks is the price cycles. Elliot Lake has a history of being boom and a bust town, and these mines did well when prices were up and they did poorly when prices were down, and ultimately they all shut down when the prices of uranium came under $10 a pound and stayed there for a long time. Every mine in Elliot Lake had to shut down. So price cycles are a significant risk. The project is very sensitive to the uranium prices, and that's both a risk and an opportunity, depending on where you think the prices are going from here. And we also have a lot more work to do on this project before we'd be in a position to go into production. So that work will take time and it's going to cost money. Therefore, the condition of the markets, the global and the Canadian economies, as well as the public markets, that can also be a significant risk.
Certainly investors will follow the story on our website, moneyandmetals.com. Will you be doing additional roadshows through 2010, 2011? How would investors follow your story?
We do have a website. That's www.pelemountain.com. And we'll also be attending several conferences in the coming months, including, of course, the Prospectors and Developers Association of Canada. That's the conference in March in Toronto. And really, for your listeners, we're always available anytime to discuss the project and our plans and what's going on out there. So the phone number at our office is 1-800-315-7353, and people are welcome to call us anytime.
Well, thank you very much for being with us today, Al. We certainly do appreciate it. I know our investors will have lots of questions for you in the weeks ahead as they listen to this and follow your website. We'd love to have you back as soon as it's convenient for you.
Well, thank you very much for having me, Mark. I really appreciate the opportunity.
We remind our listeners, as always, this broadcast is made for educational and entertainment purposes only. Stocks represented on the show are volatile. Investors must do their own due diligence before investing, and that includes seeking out professional investment and financial advice. Our broadcast, Money and Metals, and its representatives cannot be held responsible for your investment losses. We seek safe harbor.